All right, it's the short bear. What's going on, guys? Today we're going to talk about the GEVO trade. Um, I asked you about what you wanted me to talk about, and you answered that you wanted me to talk about the pre-market SEC process, um, and I also got the question about um, what made me believe that we wouldn't get a push before fading. Um, because the PM runs so strong. So I'm gonna answer both of these questions. First of all, we're gonna start with the process that I've gone through in the morning that told me, all right, this is gonna be short, and then basically how hard do I think will it tank, um, and yeah, I'm gonna take you through that process. All right, so the first thing that I did was I remember which stock it was. GEVO was my biggest trade ever. I've traded it, so you can't see it right here, but I think it was here on that massive volume day where it traded 30 million. It started at $2. I bought it right around 4 and sold at an average of 12 or 14, I think, while adding the whole time, making it my biggest trade ever by far, like 2 times my second biggest trade. Um, but I know the sticker, how it moves, how it behaves, which was pretty nice to know. I saw the daily chart first. As you can see, the price right here, we are at 3,300. GEVO never traded at that price. It's the same thing over and over again. These companies basically do a reverse stock split, which brings their price up, and then they put out some kind of dilutive filing, which means an S1, an S3, or something like that, and they dilute some, um, which is the pattern that they do over and over and over again, and it's how they basically survive. After that, so which means we have a lot of back holders that are in the stock, so people that get long and think, all right, it's going to go to the moon. But what ends up happening is it tanks basically, and they are stuck in the stock and can't get out basically. And every time it pops, some back holders are going to try to sell their position for break even or for a smaller loss. As you can see, we had this big run. That's the one I was talking about just before, which had a lot of volume. And the following days after that run, we had pretty much, I think, as a whole, right around over 60 to 80 million volume traded. Had a couple of runs which ultimately failed, which also meant, all right, so on the technical side, we had a lot of back holders regarding the daily chart and the pattern that they go through over and over again with the RS. We had a lot of volume traded just above and a lot of longs that were bagged from June to October basically, and it was the first run um, since the time we got the longs stuck. So it's the first time that they could really unload, um, even if it's for a loss, as it really was kind of a over 50 to 60% gap up. Some longs are definitely thinking about selling. All right, so that's what I knew from that. From the pre-market technical side, it looked strong, but don't be fooled. It's it's done on purpose. So I learned that lesson, or I relearned that lesson back in June, I think, when KBSF ran. It looks strong in pre-market, but doesn't mean the stock is strong. They make it look strong so people buy, but what they really want is basically to dilute as much as possible. So basically, they make it seem like it's strong, so a lot of buyers come in and they basically sell them their shares. Um, so what I saw was I woke up right around here, I think, or I saw it here. Didn't want to play it. Just kind of looked at it. I thought, all right, this market is the market was too strong. At that point, we didn't have any kind of fading move. We only had traps in the past week or 2 weeks, I think. So I didn't want to short anything pre-market, regardless of what it did or how the filings looked. So I just looked at it and saw, right, we got some kind of top at 425 right here, and we are basing in between 390 and 425. Bounced in that range multiple times, found kind of support at 390, once, twice, 3 times, 4, and almost 5 basically. So what they did right there is they are hoping that a lot of people will try to dip by it, um, and as you can see, it failed miserably. Um, it also broke out, so a lot of people think, oh, it's strong, we got some volume coming in right here, it's gonna dip back to VWAP or to support, so we're gonna buy at open, it's gonna be awesome, and it's gonna go to the moon basically, but it didn't, and that's where the filings come in, so that's what we're gonna talk about right now. To answer basically the first question, which was, what is your SEC process? And to do so, we're gonna hit up the damn SEC website, and I'm gonna take you through the filings. Alright, so first thing I look at every time is the 10Q. But first of all, so it's the process that I take, but if you look at the 10Q, you don't, or let's do it like I do it every time. It's gonna be easier. So first thing I do every time, take the OS number, the last one, and I write down in my file, all right, 8.64 OS as of, and then October, blah, blah, blah. That's the first step. Then I look at balance sheet, September 30th. All right, so we got the assets. First thing I write down, cash and cash equivalents, so right there. And I write down that number right here, which I'm going to use just after to look at the cash burn and how much cash they have left. After that, I'm looking at the total current assets, which is right here, 43 million, as it is in thousands. And I look at the total current liabilities, which is 5.5. What I do after that is I take that number, so 43,000, and then I divide it by that number right here, and I get a ratio basically. So how much more assets do they have in comparison to the current liabilities? And what you're going to get is 8, right around 8, a little bit less, 7 point something I think, which is quite big. On the really 30 companies, you're going to see some number below 1. That's what I say every time I make those SEC videos. So a number like 8 is maybe not a red flag, but I always keep it in mind. So I know, all right, they have their liabilities in check, and they do have some assets. After that, what I do is I take that number minus the 5.5, and I get the net working capital, which is in that case right around 37 point something, and I write it down. So 37 million, to get an idea how much they would have if they would need to pay back all their current liabilities. After that, I type in net loss. That's what I type in every time. And I look at, so let me see. So when I do that, I always or almost always find the right number just above. So sometimes it's going to be net loss from operations, or right here, loss from operations. And that's what I look at. So I look at that, go to the right, look at the last date, the 3 months period, so 6.1. I take that number and then I divide it by the 3 months, which means they have a cash burn of right around 2. Now, if you remember correctly, you're going to see that they do have a lot of cash, and with a cash burn of right around 2 million, they're going to take right around 20 months to burn through that cash, which is a lot. Like a lot of companies that we look at do have something like 3 to 12 months, so 20 months is a lot, and is a red flag regarding the short. After that, what we do every time, we type in warrants and try to find some kind of table or something like here. So quickly, I personally don't look at, or I skip over the warrants that are under, let's say, 50 to 100,000, just because, so depending on the price, because it's just not enough to move the stock. So as you can see, 3,500, 2,500, 5,000, lot of interest, 1,000, no thank you, 25,000, no thank you, 25, no, 16, no, 35, no thank you, no thank you, 300,000, yes maybe, but it's only the company sold so and so much, so it doesn't matter to me. And then that's the table that we are looking for. We don't get it every time, so every time we see it, it's nice because we don't have to dig through it and waste some time. They just put it right there. We look at the table, and on these what I do is not even look at the numbers right there, but I look at the exercise price as of, and then the last date, so it's September. And you're going to see that the only price we are really interested in is this 380. So everything else, as you can see, is adjusted, and that's because of the reverse stock split. So we're going to look at that. So 380, 5,000, no thank you. Then right there, Series K warrants. Issuance date, right here, 2017, and they are good until 2022. At an average price of 330, we have 312,000 warrants. So that's something I want to write down. Everything else is just noise. Everything else, you won't see the price, or the warrants are so minimal, it's just that it really doesn't matter at all. Then you write it down basically. So 312,000 at 380, warrants, blah blah blah. Write it down as you want. So after that, gonna look real quick if something is wrote about it. So I go through it. No, nothing. No. Oh, right there maybe. Maybe I'll list the Series K warrants using Monte Carlo. That's nothing there. As you can see, I'm pretty fast regarding that, so I really know right away if something is wrote about the Series K. nothing. That's all. After that, we look at offering, and then we see right there. So at the market offering. So that's why I always say the thing that you want to type in if you look at an ATM is ATM written that way. Nothing. That's the most unlikeliest the most unlikeliest way that they're gonna write it down as, and the most likeliest is at and then minus the market. But let's see if they have at the market. No, not that way. So the last one is at the and then market, and as you're going to see, we got a hit and then 17 times. And then we read through it real quickly at the market offering in February, blah blah blah. Initially allowed to sell initially 5 million worth. Was amended multiple times in June. Of approximately 84 million as of September 30th, 2018. The company has remaining capacity to issue and sell upon approximately 52 million of additional shares of common stock under the ATM offering program, which means at any time, any day, they can dilute as much as 52 million shares, not shares, dollars. Which means at the price we are trading at, so in this $4 range, it means that they can dilute right around 12.5 million shares onto the market at a $4 average, which is a lot of shares. So when I saw that, I was really happy because it's been a long time since we've seen an ATM play with so much supply basically. So you write down on your sheet 52 million, and we are done with the 10Q. That's all you want to see, or you need to see. And that's why I wanted to maybe go through these with you first. Because once you go through the 10Q this time, at least, you're done basically. You know what the warrants are and everything. And in this market, at least. Because the thing is, since the market the government shut down in America, we don't get the effect filings anymore. Which means every new S3 or S1 won't be active and won't be won't be usable basically. So the first S3 we see right there, we click on it, and then we click on SEC Edgar right there. And what do we see? We click on the file number right there, and we see the S3 is in effect, and it means it's usable. Then we click on the S3. And what do we see? We got a 300 million S3 waiting right there. So that's pretty big. We didn't, so even if we didn't have the ATM, I wouldn't go long such a stock like GEVO, because they have a history of reverse stock splitting and of diluting. So they could drop a 4-4 like so many companies did last week. So we had the first ones were 10X and TNP XP. We had MBOT. We had which one? What's the name again? So it doesn't matter, but we had I think we had 5 in the last 2 or 3 weeks that dropped in a 4-4 midday, and so an offering. So I wouldn't do that if I were you. So I wouldn't long such a stock, and I mean, 300 million is a lot. So we had that to keep in mind. 300 million, we have the effect filing, which means they only need a 4 to 4, and we had a lot of companies drop a 4 to 4 midday. So right there, wouldn't go long for any kind of money. Like it's just straight up, if you know how to read filings, it's just dumb to go long such a stock. Or maybe you could go long if, I don't know, I just wouldn't go long. Like even if it sets up maybe small size and never pre-market and hold through the open. So now we're completely done regarding the SEC filings. So as you can see, we saw, right, the company does have money, but they have a lot of dilution going on. There is no kind of pressure to get the money right now, but if you can raise and you know they have the ATM, but they also have the S3 filing and the effect, which means even if they dilute completely the ATM, they still have the S3 and still can drop something else onto the market. At least if the MVPHS lets them. But that means I know what I'm expecting. So I know I'm expecting a lot of dilution on this one. A lot more, and it's far more likely than any play that we've seen in 2 last weeks. And it's the most dilution. It's really the most dilution we've seen. So after that, I'm gonna, so I think we're done with the first question. So it's not the easiest with the effect and all. This one was kind of easy with the effect because you have the effect filing with the S3, but like even without the effect filing, you had the ATM working. But what you want to do to check it is, so you have the S3 and you have 4 to 4s. So if you click on the S3 like that one, and you check it and you see, all right, we don't have an effect filing. So if the S3 wouldn't have any effect filing, I would just look down basically to the next, for example, S1. I would click on it, then on SEC Edgar, click on the number file, and I would see, all right, this S1, for example, was withdraw. All right, so this one isn't there. So right there, I would know, all right, so this one we have an effect, but if we didn't have any effect filing, I would know, all right, S1, no filing, S3, no filing, and then I would just look down more to the next one. So S3 right there, I would click on it, do the same thing basically, and look at the overall number basically of that S3. So so click on it, file number. As you can see, they used it real good on this one. But I would click on the S3, click on the filing, look at how much it's for, so 130 million, and then that's when the work really starts, because you have to add up basically all the 4 to 4s to see how much they diluted from that amount. And I don't know the MVPHS, but if you've got something like that, you need to look at the MVPHS. If it's over 75 million, you know, all right, they can dilute as much basically as they want. You add it up, you just look how much is left, and you know, all right, they could drop a 4 to 4 for that remaining amount. And if the MVPHS is under 100 million, you know, they can only drop a third of that amount. And basically, you have to do the same work. So add up, know how much is left from that amount, from the S3 basically, and then look at, all right, if they would drop a 4 to 4, how much would or could they even drop, or could they even drop anything? So that's that. The second question was, can you talk about yesterday's trade, why GEVO was an open fader rather than push up before fading. The PM run seemed strong and pulled back and bounced at support right before market open. Also about VWAP. What are the deciding factors for your open short conviction? So, first of all, it wasn't an open short. It really wasn't. It seems like it because my arrow is so much up. So what I did go short at 417. So as you can see, right under green to red, and honestly, I should have been executed at right at 20, at 420, and that's because I looked at the tape and the level 2. So I thought the same thing. It looks strong, but the best dilution plays always look strong in pre-market. It's you want to make it look strong because if you don't, you won't dilute anything. Um, as a manipulator and company, you'd rather make it look strong in pre-market and use the volume right there. So as you can see, we had some kind of volume like right around maybe 200,000 shares traded. But as a company, if just think about it, you are using only 200,000 shares, and that's not even all. So it's not only them. So they maybe use like 50k, maybe 50k, so 50,000 shares to 75 million shares. That's them. But all right, if we do use our capital to buy it up and make it look strong, we will be able to drop like 1 million shares more onto the market. Wouldn't you do it? Yeah, you would. So that's why the ATM plays look so strong in pre-market. So looking strong isn't something against going short. It's even better because you're going to have a lot of bagged longs and they're going to dilute really hard, basically. So the more dilution and the more strong basically it looks, the better for me for the short. The original plan, so best case scenario, was looking at it right in here. I thought, all right, maybe we could break down or at least get to this 380, 390 range, push in at open to like 410, and I could short big and then risk of 425. But then it broke out, which kind of threw me off because I thought, all right, it's breaking out. Like it's not as strong as strong a resistance as basically is triple or even 4-time top, basically multiple top, or how do you call it, a double top. So it broke down, then it kind of had this range, which so basically the stock came back down into the range. And at that point, I thought, all right, what I want to see is a pop into 430 to 435 to get my short. So my first order would have been right around 430, and then one at 440, and then my cover orders at 450 basically to cover if it broke out. And I had to think about it, like it was like automated. Because right there when I play it, I know, all right, I know every filing. So I know the filings, I know how the company is, what they do, how much dilution is going on, and so on and so on. And I know my stats through the data. I always tell you and teach to make the spreadsheets. So you know that I preach it every damn day. The spreadsheets, which give me the conviction. I know how likely it is to break out, basically out of the pre-market highs. I know how big the fade is going to be, and so on, which gives me the conviction basically to play it, and I'm not afraid. If I wouldn't know the odds and I would think, all right, this chart looks strong and that's all, I would piss my pants to go short at open, basically. But I know how the odds are for me on this trade. Which gave me the conviction. So it opened, tried to push, like, and it really did on some damn big volume. But what they do, like the ask was only 100 shares, 200 shares, maybe 300 or 500, which is not a lot. That's nothing basically. tried to push up, but what did it do? Like, it looks so strong. You got a lot of volume coming in, but you only moved 2 cents. That's not normal. Like, you shouldn't have that kind of selling pressure or downwards pressure on the stock that looks so strong and on that kind of volume. So as it tried to push up and really didn't have any fuel, I just decided right away, all right, gonna hit it, boom. In that split second, I decided I want to play off that level right here. So a 430 would be for half of my shares, as I was planning on getting my first shares at 430, playing off 450. My stop was still 450, but then only for basically half of my shares, so that my average stop was right around 440, basically. Because the stop is just too wide for me to get in full position at 420. And it basically was the plan. So I had to think real quickly to get my risk ratio basically right. And yeah, I hit it right away. And yeah, crashed down. Right away, second minute, we crashed down to 360. Didn't cover any right there because it just whipped down, boom, back up. Came back down, wanted to see if we can test the lows again. Couldn't make it right away. So I covered my first piece right around 1/2. Came back up. The plan was to add at VWAP. We tried to push up right there. We had, and then some buyer popped up with an order of 50,000. So 50,000 on the bid, and you had 200 shares on the ask. What did happen? So basically, we tried to hit the ask, and it stayed there. It absorbed all that volume from that 50K. And the 50K disappeared. So as soon as the 50K disappeared, I realized we are under support right there. We just retested it, and we just basically had a spoof order, and we tried pushing up, but we couldn't make it even after that big drop. We had a lot of volume, but couldn't break out just a bit. So I thought, all right, it's going to crash down even more. So shorted it, hit it on the bid. Right away, knew what to do basically, and I hit it with even more size. So I had 1R right there, and then I had 1.5 right here. So I added basically the half that I took off right there, and added another half to get to that 1.5. Came back down and kind of found support at this 360 line. So tried pushing up, crashed down, then it tried again. And then it crashed down, but kind of held. So we only crashed down by 4 cents, like 4 to 10 cents. And I decided to take it off. So why did I take it off? Because I thought, all right, most of the time, almost every time, I get some kind of VWAP retest in the afternoon or near 12. Thus, you need spreadsheets and data. I know I'm gonna get a retest most of the time, and I just don't want it to reclaim basically, because a lot of stocks, the majority of the stocks, trapped and came back over VWAP, retested the highs, and then basically crashed down once more. So didn't want to get any, so didn't want to hold it basically and guess. I just took it off and thought, all right, if it's the play that I think it is, if it crashes down, I'm okay with missing the move down, as it will get back up to the VWAP where I can short it, and it will be higher than my cover, so I will be able to recycle and get the next leg down. So that's the whole thought process. So to answer the question, why did I short it at open? Well, because I didn't get the push, and that showed me even more weakness. So if GEVO would have crashed down right away, like, but not that kind of crash, but just crashed down, kind of held, and then push up, I wouldn't have shorted it. Like maybe at 430 like I planned, but I wouldn't have touched it. But as we opened, we tried pushing right away, but we only just moved like from 419 to 423, 424, like 4 cents on that kind of volume. Like, now, are you kidding me? No, thank you. Um, Not along. So that's why I hit it right away. I think I shorted 3 seconds or 4 seconds after market open, but it felt like a minute basically. So I was really focused and I knew what to look at. Um, yeah, and I think I answered the pre-market run and all pretty extensively. Um, and deciding factors regarding the open short. Well, I want to see a lot of dilution on the place where I think already we could have some dilution, but I'm not sure. We don't have a lot of it, and we had previous runs which could have used that dilution. I wouldn't have been so aggressive, basically. But when I know that there is a lot of dilution, and it, for example, like here on GEVO, it's the first time that we can use that dilution, and the company has a history of dilution, I'm sure as hell gonna use it and short it. All right, so that's all for today. I hope that I answered all your questions. This video is a bit longer than the other one, but I really want you to understand what I'm looking at, as these plays are really my niche plays. This one and the death drop, it's what I'm the best at, and I'm always prepared for that kind of move. All right, that's all for today. See you guys in chat.